Hello everyone, welcome back to my channel. This is Payal Bhagat and this is my fifth video regarding chapter 5. In previous videos I have explained about how to solve a long sum which consists of writing journal entries, preparing ledger accounts and balancing the same. Now, while solving a long sum and its adjustments, there is an adjustment of goodwill, which is the topic for today, which is about how much amount of goodwill is brought by a new partner and its accounting treatment. So in today's video, we are going to learn about goodwill and its concept, its accounting treatment in detail. Firstly, let me clarify a point here that whenever a new partner is admitted in a firm, the particular partner is supposed to bring the amount of capital and the amount of goodwill. So there are different situations relating to accounting treatment of goodwill which are given here. You can go through, and it is just a part of theory. You are supposed to read the same. We'll directly move towards the practical application of goodwill, the concept of goodwill in the long sums that we are solving. Now, as I said, the partner is supposed to bring the amount of goodwill. So we have two situations regarding this here, I can see. We have many different situations. The first two are here. First one, I'll read it. When the goodwill premium is paid privately by the new partner. Now, first of all, who's the new partner? In the sum, in your textbook, there are two partners already doing the business, running a firm, and there is a third partner admitted in the firm, and that one is the new partner. This explanation is in regard with your textbook. It is not so that there should always be three partners only. There can even be four and more. Now, second concept is practically applied. Sorry, I was explaining the first. Let me finish. When the goodwill premium is paid privately by the new partner, when the goodwill premium is paid privately by the new partner to the old partners, no entry is recorded in the books of accounts of the firm. I have read here. So whenever the new partner has paid the premium for goodwill privately to the old partners, now old partners are the one who are already running the firm, and the new one has been admitted, and that particular partner is supposed to bring the amount of goodwill premium, which is that goodwill premium actually. So if that particular partner has paid the amount of goodwill privately, then no entry is recorded in the books of accounts. Second option, now this is practically applied in your long sums which I was talking about. When premium for goodwill is brought in cash or kind. Cash or kind is firstly when the partner will bring the amount of goodwill in cash, or kind is if the partner brings in any other way. That could be land, building, assets, anything. And it is retained in the business. So let us see the first journal entry. Before that, they say that the amount of goodwill brought in cash or kind by new partner is shared by the sacrificing partners, that is old partners, in their sacrificing ratio. What do they mean is, say for example, there are two partners A and B. C is the new partner. This is just for understanding. C is the new partner. C is going to get admitted in the firm. So definitely the ratio, profit and loss sharing ratio of old partners is going to decrease. I have explained this concept earlier in the videos that I have prepared earlier, maybe in the introductory video, the very first video, you can understand this point if you don't remember. So definitely old partners become sacrificing partners. So the premium for goodwill, that is the amount of goodwill which is brought by the new partner, is shared by the sacrificing partners, that is old partners, that is A and B, in sacrificing ratio. Now how do we obtain sacrificing ratio? That also we have learned. We have a formula which is old share minus new share of the partners. When you deduct these things, when you deduct the new share from old share, you get which partner has sacrificed how much. In short, you'll be getting sacrificing ratio. And still, when we are going to do the practical sums, I'll explain again how to find the sacrificing ratio. Obviously, it is going to be a part of that particular sum. So basically we were talking that the new partner has brought the amount of goodwill in cash is the first point. We have two options here, cash or kind. The first one we are reading. When the premium for goodwill brought in cash by the new partner, at that time you are supposed to write down a journal entry which is cash or bank account debit to premium for goodwill account. Whatever amount has been brought in cash by the partner is to be placed here, the value I'm talking about. So cash or bank account debit to premium for goodwill account. Second journal entry, if the partner has brought the amount of goodwill, that is premium for goodwill, as a personal land, building, motor car, then the journal entry is, these are all assets. Definitely they come into the business. Here we apply the rule of real accounts, debit what comes in. So with that concept, land and building account debit, motor car account debit, other assets account debit. That could be any assets other than motor car, land, building, to premium for goodwill. This will be more clear when we'll apply this concept practically in sums. But it is always necessary that you understand the topic before solving a sum. That is 50% idea you'll get here, and remaining 50% you'll get while solving a sum. So next, when you are solving the sums continuously, it will be 100% clear. And they also give you a journal entry. Then they say that you can write only one journal entry instead of the first and second. But here again I would like to highlight a point that in your syllabus, the sums that you are going to solve will consist of the first journal entry only. Second journal entry and the adjustment related are hardly seen. Okay, so I will consider the first journal entry for now, and in context I will explain further. So C is the new partner. The example that we are considering, A, B, C. C is the new partner. New partner has brought the amount of goodwill, premium for goodwill I mean, in cash. And I've written a journal entry, cash and bank account debit to premium for goodwill. And as we know, we have had a point here that whatever amount has been brought by the new partner is shared by the old partners in their sacrificing ratio. So this journal entry is just about the amount of premium for goodwill brought in cash. Now ahead, this amount is to be shared by old partners. So the journal entry regarding the same we have here. See, premium for goodwill account debit to old partner's capital current account. We have an option here. I have explained this previously. There are two methods of keeping partners' capital accounts. So whichever is followed, you are supposed to write that. So here, the amount of premium for goodwill has been shared among the partners in their sacrificing ratio always. Now, there is an option here. As we know, they've highlighted a point that whatever amount of goodwill has been brought by the new partner will be given to the old partners in their sacrificing ratio. Now, if you remember, while solving the sums of chapter 4, or say the short sums of chapter 5, which I haven't explained, and I said that I'll be explaining it along with the long sums. But the concept is also included in chapter 4, so let us talk about it. While obtaining sacrificing ratio using the same formula, that is old share minus new share, if the answer is negative of any partner, that means the partner has gained instead of sacrificing. So, if the case is such here, then what is going to be the journal entry? This is just an option. This remains the second one, but there is a minor change in the second journal entry. They say that what if the partner is gaining while the ratio has been changed, new ratio, in comparison to old ratio. Yeah, so they say here, you can read this if you all I think you all have your textbooks, yeah, and I'll read it for you. We have it here. If out of old partners any partner gains in new profit loss sharing ratio, as I said, this compared to old profit loss sharing ratio, so that time the journal entry is going to be this. Which was the previous journal entry? Premium for goodwill to old partners in their sacrificing ratio. Now, from old partners, if one of the partners is gaining, that particular partner's capital or current account is to be debited. Why? That will be clear while we'll get an adjustment regarding the same during long sum, which we are going to do ahead. Yeah, okay, so this was the concept of goodwill, which is to be applied in the long sums for now. We also have a detail ahead. Goodwill appearing in the books of old partners is written off among the old partners. This is the note. I mean, this is a part of theory only. Let us quickly understand and move ahead. But this is particularly a part of an adjustment. The topic given here ahead, after this journal entry, is not a part of an adjustment. This is regarding, see, they say goodwill appearing in the books, balance sheet of old partners is written off among the old partners in their old profit loss sharing ratio, for which this journal entry is written. Now, many a times, old value of goodwill is mentioned in the balance sheet. Which balance sheet? We have solved a long sum. I think it was an illustration. There was a balance sheet. Old values of all the assets and liabilities were given. Thereafter, I have uploaded a video regarding reserves and surplus. That is the concept included. I have also said that reserves and surplus are given on the liabilities side and the expenditures are given on asset side. So one more thing is added in your balance sheet, that is the old value of goodwill. See, they've written here, shown in old balance sheet. So now, as a part of reconstruction, or say as a part of admission of this chapter, I mean, admission of a new partner, many of the changes are taking place, that is revaluation of assets and liabilities, then The partner will bring the amount of capital, partner will bring the amount of goodwill. So new value of goodwill is decided. So what about the old value of goodwill that already appears in the balance sheet? Yeah, so the old value is to be written off among old partners. Yeah, see, you have a journal entry here. Old partners capital current account debit to goodwill account. So see, goodwill has been credited here. Definitely with the old value they've written here, shown in old balance sheet, definitely it is going to be the old value. Yes, so here it is credited, that means the account of goodwill has been closed. That means the old value of goodwill, I mean to say. Yeah, so this is the journal entry for that. This will also be clear much while we'll be solving the practical sums. Yeah, okay. So I think the concept of goodwill, the necessary concept of goodwill required for long sums is enough in this. So what you all are going to do from here, the second topic of the explanation that I have taken. The first journal entry, you can of course skip the second one. You are supposed to read, but you are not supposed to memorize for now. You are going to write down the accounting entries of goodwill. The first journal entry, the second one can be considered this, or you are going to write this in or in an option. That means you are writing first as well as this one. They've written or here, that is what I mean. You are not supposed to write this explanation, you are supposed to read it. Yeah, and you will also write this journal entry, and that's all. Once you memorize this, then it becomes easy to apply this concept practically. While solving a long sum, you'll be having an adjustment of goodwill. They'll say that so and so is the new partner, and that particular partner brings so and so amount of goodwill. So that time you are supposed to decide that what accounting treatment you are going to give regarding the amount of goodwill that has been brought by the new partner. So that concept is given here, the things that we have learned today. So that's all for today regarding the concept of goodwill. In case if we have any other adjustments further related, I'll explain the same while solving those particular adjustments during the long sum. And over and above this, there can also be an adjustment of goodwill related to chapter 3. That is, they are going to present various figures of goodwill, various figures of the amount of profit or say loss if you have it in any year. And then they are going to ask you that you obtain the new value of goodwill. Yes, so all I'm trying to say is the concept of chapter 3, which is particularly chapter of goodwill, is also useful in chapter 5. So make sure you have gone through chapter 3 very well, and if not, then you should start revising the same. And please go through all these journal entries and this theoretical concept a bit. This is just for the sake of understanding. There is no need to explain this in detail. And still, if you read and if you don't understand anything, then you can definitely write your doubts in the comment section given below. I'll be happy to solve them. So that's all for today. Make sure you learn these journal entries, and then we can start with the long sum. So I end my session for today here. We'll see you all in the next video. Till then, stay home and stay safe.